Don Dwyer at Guardian Jet. Really excited today to share some thoughts with you on the markets and what's going on in our world. Anecdotally, I'm going to tell you that we are really busy, and as I speak to other dealers around the world, the IATA group, some of the other better dealers, everybody seems to be really busy, and I've heard this for a number of months. Now, the statistics or the data doesn't always suggest that, but I will tell you anecdotally, everybody is slammed right now. Our world is sort of divided up into two different groups. There's the corporate group and then the high net worth individual group. On the corporate side, a lot of corporations are not flying nearly as much as they were a year ago. That their flight operations have slowed down dramatically. Of course, there's some exceptions to that, but for the most part, the corporate world has slowed down quite a bit in terms of flying hours. There's also a corresponding drop in the buying and selling of airplanes. So I haven't seen a big sell-off of corporate assets yet, a big sell-off. Like in 2009, we did see that. But we haven't seen that. We've seen some people try and get out of leases that were coming up in a year, etc. But for the most part, we haven't seen a huge sell-off. What we have seen is everybody just take a wait-and-see attitude. Let's just see how this develops before we move into more buying and selling. We're starting to get some glimmers of change there. So we're just now talking about our first real fleet swap of the year. But for the most part, corporate world's pretty slow. The high net worth individual world, however, has just taken off. So for us, I give a lot of credit to our sales force. Our sales force is, we have, I think, 9 salespeople now that are out there pounding the pavement, and they're really bringing home new customers to us. Sometimes first-time buyers, quite often people upgrading their airplane. But big jump in the high net worth world. So as we slow down on the corporate side, our numbers are going to be very close, I think, to last year, because of that pickup in the high net worth individual side. So there's a few things that are driving that. One, and this is the biggest one, is value. We've never seen a better time to buy an airplane, a resale airplane. We've never seen more value and prices lower on the used market than we see today. At the end of last year, we were telling people in the fourth quarter, we were telling people to kind of slow down and maybe wait for next year on a purchase, because we saw rising inventories and slowing rates of sale. So we were going into this year thinking that there was going to be a softening of prices, and then COVID came along. So right now, value is a big driver in why people are buying airplanes. Of course, you can't ignore the effect that the coronavirus has had on all of this. One of the outcomes is a lot of our customers don't want to get on the airlines. So first-time buyers are buying in sort of record numbers and buying aircraft, by the way, from light jets to heavy metal, all across the spectrum of first-time buyers. So they're driven by value, and they're driven by not wanting to be on the airlines. I also think there's a piece driving the business, and this is in the people upgrading. And there's more people upgrading than there are first-time buyers. So we're really being driven by this notion of upgrading. And again, you go back to the value piece of that. When you upgrade, for every dollar you lose on a $3 million airplane, you gain 2 on a $6 million airplane. So the notion of upgrading and saving money is certainly at play. But I also think there's a psychology going on with COVID, and people are doing what they've always wanted to do. So we're getting a lot more requests for the airliner type business. Certainly, right now we're buying a lot of large cabin, ultra long range airplanes for our customers. So so that's been an absolute boon. And if you'd have told me in April, when, as my brother said, you could hear crickets chirp around here, if you'd have told me the levels we're at now, I would have hugged you, something that of course we're not allowed to do. But so business has been okay. But there's some competing data that I want to get into. So if we look at the 130 markets that Guardian Jet tracks. So everything from the TBM that we fly to the 7500 and the G650 and now the G700. So the 130 airplane markets that we track, we don't track as much as Blue Book or VREF, but we track kind of the airplanes where we can make a living, that we buy and sell. And those airplanes are down about 13% this year in number of transactions over last year. Remember, last year they dropped about the same amount over the year before. So you're looking at a 25 to 30% drop in the last 2 years in number of transactions. Now the fourth quarter is still to be determined, and we usually have a big fourth quarter, so that's going to normalize a little bit, but we've certainly seen September to September a drop of about 13%. There's been a corresponding drop in residual values. So anytime you see inventories increase and price and rates of sale slow down a little bit, you'll get a softening of price. Airplane markets are traded so thinly that you don't always see it immediately, but over time it's hard to be economics 101. So we've seen less transactions and we've seen residual values drop. During COVID, during the first, March, April, May, we were pegging it at somewhere between 15 to 20%. And we actually, that's what we saw. That's what it took to sell an airplane that we had for sale. We were lucky at that time that we had a lot of jets for sale that were being replaced by jets we bought for our customers last year. So 15 to 20%, we saw that drop immediately, but it hasn't moved from there. In some instances it stabilized and might even be inching up a hair through this fourth quarter of activity. So we haven't seen the 35 to 40% drop that 09 represented. I started saying in the beginning of this is not 2009 all over again, and it hasn't been. It's been very hard to predict, but it's not 2009 in terms of residual values. I also think one of the big differences this time around is that the OEMs just went into this in a lot better shape and a lot smarter from having been through 2009 and the last real great financial crisis. The OEMs all literally cut back production rates, which kept them from having to discount significantly. So I think they all played it pretty smartly. I think there's great prices on new airplanes right now, and they're just having, as the corporate world slows down, there's certainly a desire on the OEMs to take more orders, but I think they all behaved pretty well and cut their production rates, especially in light of when you think about the residual value loss of 20% in a year, which is probably where we're going to settle down at. That's a pretty good hit for 1 year. Let's talk about some specific airplane model markets, because I think it'll highlight this competing data that we're looking at. If you look at the graphs behind me, there's 4 graphs. The top 2 are the number of fleet for sale. This happens to be the Phenom 300. The number for sale, or the percent for sale in the fleet. The bottom 2 graphs are one we call market duration, how long the airplanes that are on the market have been sitting on the market, and how long the airplanes have sold in the last 6 months have sat on the market. And then the last chart in the lower right is the absorption rate. The absorption rate is our measure of the size of a market versus the rate of sale. We measure it by how many months of inventory are currently on the market at the current rate of sale. I'm going to talk about a few different models: the Phenom 300, the Sovereign, the Challenger 300, the 450 from Gulfstream, and the Global 6000. All the charts are going to look very, very similar to what you're seeing behind me. And I'll give you some specific numbers because I think they highlight what we're trying to say. First of all, I don't think prices have I think prices fell 15 to 20% during when we really were getting our arms around what the coronavirus was and the lockdowns. Since then, they've stabilized. Some might have gone up a hair, but pretty much it's stabilized. I think at the end of this year, we'll see 20% as a round number to use residual value loss over the course of the year. Not a bad number when you look at 2009, or when you look at what things look like in March and April. But on the phenom, in the fourth quarter of 2018, there were 13 airplanes for sale. At the end of last quarter, just a few weeks ago, there were 42 for sale. On the sovereign, it went from 8 in the fourth quarter of 2018 to 27 at the end of the third quarter of 2020. Challenger 300 went from 17 to 33 airplanes. The G450 went from 17 to 39 airplanes. The Global 6000 went from 6 airplanes to 30. Now that's a little unfair. That's padded by in 2018. The Global 6000 hadn't been out that long and nobody was selling them. But still a dramatic increase. For every airplane that we look at, inventories are increasing dramatically. But we're also seeing the absorption rate slow down a little bit or stabilize. And again, that's the size of the market versus the rate of sale, or our way to look at how is the market absorbing the aircraft for sale. And those tell a little better story. Not perfect yet. It's certainly not a seller's market yet. But it's not a bad time to sell, and it's certainly a great time to replace your airplane. Again, we just go back to never seen better value in the used marketplace. When you're upgrading, you tend to save more on the side you're buying than on what you're selling. So very, I think that's what's driving the activity that we're all feeling in the fourth quarter. So a lot of optimism here at Guardian Jet, especially compared with 6 months ago. You know, we hope all of you have stayed healthy through this. Here, we're like every other company out there. The priorities here have been this year to, take care of our employees, the health and safety of our employees, to preserve cash, certainly, and to control expenses. The thing we didn't expect was the number of transactions would actually start to approach what we did last year. So very grateful for that. Listen, whatever market you're in, whatever airplane you have, or airplanes, in the case of our corporate customers, the devil's in the details. So your market might be a little different, but please get a hold of us. Please get a hold of your salespeople. Call me directly. We love to talk about these markets. We're looking at it every day, and it's just a very interesting time in our business. Thanks for your time today. Can't wait to all get together in person again someday, but for now this will have to do. Thank you.